Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Retail earnings again in the spotlight. We'll talk about L Brands and Best Buy. We'll talk about some optical names cutting their guidance in the name of Huawei. We'll cover some stocks breaking down here. Tesla, Apple. Talk about whatever you think about, want to talk about in the chat. There's some takers in. We'll cover them. BJ's also had earnings. Weibo and Cena did as well. So did C-Trip and NetApp. So we'll cover some of those. Talk about some ratings as well. Chipotle again downgraded this morning. Gilead and AMGN upgraded Citigroup. So we'll talk about those. And our guest today, Chris Temple, editor and publisher of the National Investor. He would join us at 8:35. In the meantime, Joel, what is the word here overnight?
Oh, market never had a chance, Spencer, last night. Weak close yesterday, follow through in the after hours trading. Your pre-market high stands at 58.50. That's just above your closing price, and I'm sure a lot of people would like to see that today. So that's a major target on the upside. On the downside, we went to 25.25. Unfortunately, I don't have anything for you there. I'll take a look at 32.50, which is Monday's low, and see if they can hold that off the open. Beneath that, 28.15. That's your 6-day low, and just in case we take out that pre-market low. Supplies leaning heavily on the crude oil market, down $1.01 at 60.41. Big support at that round number of 60. Had several lows in that area. Current low 60.26. Gold getting a little bounce, holding that 1270 area once again, up 280 at 1277. Silver up 2.6 cents at 1447.5. And let's see, I take Bitcoin off and then I put it back on. But let's look at the Bitcoin futures, and in the red, that 8,000 is a big resistance, down 340 at 76.10. Triple D, any action? Where would you like to start this morning show?
Oh, action everywhere here, Joel. I'm tired. Tell ya, this has been a long night. Not only was my daughter up a lot, I had to get up and trade too because we had action. So I've been up for a long time, and this is the look of being up for a long time. You wear the same sweater you did yesterday, and you don't shower. Look at this hair. I am a mess. But anyways, I'm here for you guys. We're going to talk some trades. We're going to talk what's going on here. And I tell you, it's pretty much selling across the board.
Yeah. As I said, it was the weak close yesterday. I mean, what do you want to do? You want to blame it on trade tensions? I mean, that's been going on for a while. We got some of the optical companies cutting guidance. But let's try and start out with a little bit of a positive note here. Because Yeah, we got
I'm looking at my screen right now. Okay, I have 200 stocks up. I only see, well, this is unbelievable, but I only see 2 green. One is there's more than that, but of the main stocks here, I see Best Buy and I see Sprint. So you must be going to talk about one of those two.
You forgot one.
What?
L Brands.
Now, L Brands didn't make the cut on my screen, so it is up there too. But it did make the cut of the main stocks that I follow, the 200, and they're mostly top S&P components. L Brands is not a top S&P component, at least not anymore. So it didn't make the cut. Not for my screen, not for the quotes that never leave my screen.
That never leave your screen?
I add some for the days, which I haven't done yet, but typically the stocks that never leave my screen. I'm talking stocks. Lowe's, Hewlett-Packard, IBM, Johnson & Johnson, Procter & Gamble, Coca-Cola, Pepsi, JP Morgan.
You don't need to name the whole 200. You could probably
Baba, Twitter, all the fun stuff. So
you could probably do it in like 30 seconds as fast.
Of those, I see Sprint trading higher and I see Best Buy trading higher.
Okay. All right, let's start with Best Buy. Let's start with some positivity here this morning.
All right, we'll go to Best Buy earnings. They reported Yeah, let me pull the numbers up. Actually, I had them on my screen this morning. Q1 adjusted EPS $1.02 versus an 86-cent estimate. Sales of 9.14 versus $9.13 billion. So both EPS and sales for the first quarter higher than estimates. Q2 guidance that they gave, EPS was in line, slightly higher. Sales guidance also slightly higher. Fiscal year guidance for the EPS and sales also slightly higher or in line with estimates. So basically good across the board.
And you know what? It was real good report here. If they would have reported this yesterday, this could have pulled a target and been up $3-4. But they reported on the wrong day. So they're getting a lift, which they should, but maybe not as much as they would have if they would have reported yesterday. Best Buy, it's important to report on the right day. This is not the right day to report. So it's up, but not as much as I would think it would be if we were actually not getting destroyed across the board.
You did get a spike, not a great looking 15-minute chart here. You did get a spike up to 72.62, but I'm kind of focusing on the dailies here. And when you're looking at the dailies, man, I see two highs in the 72 handle, 72.20, 72.95. So really no major resistance until you get up there. I don't really have a stopping point. Maybe look for any kind of size. There's really not much size in the book, right? In Best Buy, they don't really show much. So
we can go take a look. In certain levels, you can sometimes run into some size. It's always a good exercise. So we'll go look and see what's in the NYSE open book here right now, and that is bare up till $80. So there's nothing in there.
Yeah, there's nothing in there. So we'll see. It's I'll call 72.20 the first stopping point. We did get over that. On the downside, you're up $1.43. So as always, good earnings. You get a pop. You don't want to go red, and that would take place at 69.17. Actually, Street kind of leaning the wrong way into this report as we closed on the exact low tick of the session. So 69.17 is what I'm keeping an eye on the downside.
Jump over here to the other green stock if you want to just stay obviously on positivity mode here somehow is Sprint. There was headline broken this morning by CNBC that this deal is potentially back on.
It's off, it's on, it's off, it's on.
Oh no, it's fade everything.
Yeah. Fade it all.
Fade it all. If you ain't fading, you ain't trading. Okay, continue.
It's up. I mean,
I don't even know what to say to me.
I don't even know what to say because something could come out in the middle of the day and it could totally change. So it's getting a little bit of a bump. That move on Tuesday was ridiculous. I think you're going to have a really hard time getting back up to that area. So I guess the leader in this one is T-Mobile. I mean, is that the one you have to follow? I mean, there's really no price on this thing. So I look at T-Mobile, that's trading in the green too. I just keep an eye on the headlines and I keep an eye on the prior day's lows. For T-Mobile, it's 76.14, and for Sprint, it is the low from close near the low of the session. It's 6.58. But I'm sure some people are just getting tired of this and just maybe are going to try and unwind it because it's too hard. I mean, to trade the spreads on this thing, it's probably constantly moving.
So T-Mobile, Sprint both get a lift. AT&T and Verizon both getting a slight lift on this as well. They were trading down. They're still in the red because the market's so heavy here today, but they're not down as much as they were. So just keep in mind, I mean, that's a little bit of life here for the day. Let's go to the death. And that's pretty much China. It's a mess here this morning. Alibaba goes down $4 every single day. Totally regretting not selling this out of my long-term portfolio when I said that day that it was getting overdone when it got up over 190. Anyways, I did not envision the thing giving all of its gains back in the next 3 weeks, but that is exactly what has happened since those trade war stocks have started. I mean, emerging markets have just been absolutely destroyed. This is all obviously due to the trade war. They were doing really well for the first 4 months of the year until that tweet in early May, and then that was the end of them. So I guess, the people who were buying that day got punished. Because there was a lot of follow through still to come here. And we've been straight down in everything to do with China for basically the last 3 weeks.
Just talk, Baba here. You seem to be finding at least someone that wants to buy this stock at the 153.80, 154 level. Your pre-market low comes right in here. On the dailies, I see a triple bottom, and that triple bottom is 150 to 151. So you might be a little bit early here at 153.80. I see the major support at 151. On the upside here, we're trading down 444. Boy, in order to get to the bottom of yesterday's range, you need to get up 158.07 is your resistance.
Remember, there's also pressure. AABA is liquidating. They've said that already, and they're obviously trying to get out of their BABA. So that's probably putting a little bit of pressure on you because they own a pile of it. So they're slowly trying to liquidate. They said they were going to use all means possible, whether that be in the open market or private deals or whatever, to try to, liquidate this portfolio, which is full of BABA. So that's probably not helping. When AABA gets all out, maybe it slows down. But I mean, this is all macro effects. Every China stock looks the same. They all look like an absolute disaster. Baidu looks the worst of them all. It's sat here for 3 days, Baidu. Now it's breaking down again. I'm not going to... you look at it at 115 this morning on BIDU, and you think back to the flash crash low of 2015 on that day when we got down to 100 on the kisser. It looks like that's where it wants to go. It looks like it wants to go to $100. So you're talking about a stock back in early 2018, so just over a year ago, that was $284. It wants to go to $100. So, I mean, eventually you got to think there's value somewhere as you approach 5-year lows. But anyways, it just continues to go down here. It's come this far. Why not?
Just after the earnings, just never a chance at a bounce. Yeah, through yesterday's low, right? Pre-market low, if you're going to lean on something, 115.18. But after that 100 met flash crash low, and that was 2015. Not much in there. And on the upside here, if you want to buy this thing on strength, keep an eye on 121. Pair of highs from Tuesday and Wednesday, 21.12 and 21.15. And 21.12, Dennis, wasn't that a good album by a Canadian band?
You got me on this one. Who is it?
Oh, come on.
I don't know the albums that well. I just listen to the radio. I never bought a lot of CDs. What was the album? Who was it?
Spencer?
No, I don't know. I was going to say 2112 is a good restaurant that I went to as a kid in New York City. Mars 2112.
Rush.
Unrelated to
Rush.
What you're talking about.
Yes.
I never listened to Rush.
You're kidding me.
Never. I never was a Rush fan. It was a different style of music. And, look at me, man. I was into grunge when I was listening to the 90s. I'm all
Look at
grungy.
The chat
Nirvana,
is floating.
Pearl Jam. I liked all that stuff.
David W got it. Jason got it.
Era, not the
Crypto, we'll just call him Crypto got it. George Gotch got it. East Coast Nomad got it. And it's a Canadian band. I mean, how many Canadian bands
I know. They're going to throw me out of the country for that.
Oh, man.
Sorry. I'm disappointing all of the fans, all the pre-market prep fans here today. Wasn't a Rush fan. I appreciate their music. They did a lot of good, it was okay, but it never really was my style of music.
Okay. All right, Spencer.
Nirvana.
Kurt
Cobain died too soon.
One thing before we leave the China talk is that Weibo and Sina did have earnings this morning. I've never quite understood how this works, how Sina spun off Weibo, and they own a majority of the company, and yet there are separate tickers, but they're the same company. I don't really know. But in any case, Sina, their earnings this morning were a little bit light, and Weibo, the earnings were, I think, the same. They actually beat on their EPS and sales. So
yeah, they don't report on a day like this either, so it doesn't even matter. They were going to hit these stocks whether they beat or not. Down $6 here, taking these Chinese stocks. This is like, well, I guess it's ground zero for the tweets, but holy cow. I mean, you start looking at where these things have come in the last 3 weeks. If we ever do get a deal, there's going to be some money to be made on some of these stocks because these things have been in free fall for 3 weeks. I mean, we talked about Alibaba, but when you start looking at the smaller ones, some of these things are destroyed. I mean, Weibo's $70 at the beginning of May. It's $44. It's lost like 2/3 of its value more than a third of its value. It's lost almost 30. Well, to do the math on that, 30, 25. I've been up all night, so I can't think very well. Lost 30% of its value in 3 weeks. Crazy.
Right, S&P's sliding a bit here, 28, 30, 50. We were talking about on the pre-market show whether the stocks were down enough and, compared to the SPOOs. And I kind of thought that the SPOO should be down a tad more based on percentage basis. And yeah, that's where we're at, 28, 30. 25 and a quarter is your pre-market low.
Jump over here. Just continue with
L Brands.
Oh, yeah.
Yeah, we forgot about those guys. They had earnings as well. So earnings per share for LB, 14 cents versus a 0 cent estimate. Revenue, 2.63 versus $2.56 billion. So a beat on both those numbers. Same store sales, flat. And this is guidance, I believe. Flat. Nope, I'm sorry. This is the earnings. They was flat. They were expected to be down 1.3%. Did they give guidance here? They did. They narrowed their guidance for the fiscal year, raising the low end, but their Q2 EPS guidance was a little bit light. So sort of a mixed bag on the L Brands guidance.
It's a nice lift. It's a stock that's been heavily shorted for a while, and it's been a stock that's been in a gutter. So it can move counter to the market. Again, though, you run an overhead supply issues all over the place. I mean, everybody who's bought the stock in the last forever is down money. So all those people trying to get their money back. I mean, I go to the monthlies for 8 years, and you're at 8-year lows yesterday. So you're getting a nice lift here. That's the good news. Bad news is it seems like sellers just emerge on these rips. I don't know if it's going to happen here or not. Maybe it holds up for a few days. But again, I'm not buying stocks that are ripping because I've been punished too much buying stocks that are ripping.
The initial surge took us up to 24.75, and we're down $1 from there. And it's, just someone just taking some profits. I don't have like the option pricing here. So we closed, in the 21 handle. So I don't know what you had to pay up for the 21 and a halves or 22s or 23s even. So you got a little bit of selling. I can't tell you where support is because I don't see any. You pulled off the high. The low of the last bracket is 23.72, and if you're waiting for a gap fill, that's a 22.51. So maybe you get a quick sweep down to that area, and I'd be a little bit more comfortable with the long. On the upside here, I don't know if you can get to that pre-market high 24.50. It seems like there's already pressure on it, and you do have some daily highs, though, at 24 and a quarter, 24.20 and 24.29. Then it opens up to 25. But tough day to be reporting. I am one of those unfortunate people that's long to stock. I should have sold it when Ryan Craver told me to. But as you say, Dennis, it's part of my portfolio, just much smaller, but getting a little bump today.
It's hard. And the rips, and look at VIPs from last night, VIP shot. This stock ripped it up last night. Stock was trading up significantly after hours on a decent report there. And I shorted it. I shorted it last night because, there's a lot of overhead supply here. And the first, hint of any trouble here, this thing will go right back down. I've already covered it. So I got up to 770. I was short in 770, 775 area there. Nice. I covered it this morning at 720. So I didn't even have to hold it more. I didn't even have to hold it into a regular trading session. It's how quickly these stocks give it back. They report good numbers. Anything, it's to do overseas here right now is getting punished.
This is a China stock, isn't it?
Yeah.
Yeah. Okay.
I don't like them. I don't know why.
Hey, Dennis, what's that bankrupt stock that you got caught in on Tuesday night? What, ASCMA,
I think it was. And it went up. It went up again.
I know.
It was squeeze. That was classic short squeeze. So they go bankrupt. Everybody thinks they're going under. So, of course, you double the stock.
All right. Let's get the Tesla out of the way.
Talk to me, Tesla.
Is there news?
It doesn't need news.
There's no news. It doesn't need
news.
news.
So bad call by us. We thought maybe potentially we could see a double bottom, maybe play it off of that. Glad I did not. Sorry for anybody who did, because it was a bad call by us. Took it out. So we said if it takes out the low of the move, you got to go. It did take out the low of the move, 196 yesterday. Obviously cascaded through that. There's no calling the bottom on this thing. We were trying to be heroes, me and Joel, and you get in a lot of trouble being heroes like that, trying to call bottoms. Mistake. Stock continues to go lower. Glad I didn't lose money on it.
And someone made a point. Jeremy. When did we have Jeremy on? What day last week?
He did. He was on the show. It was 220. He said this could go to 180 in a hurry. 5 days later, Jeremy Newsom, if you're listening, you are absolutely correct. We are going to probably see that level here this morning if we haven't already seen it in the pre-market, because we were trading at 183, just down another 10 points for fun.
He was on the 17th.
He was out on the 17th.
Trouble on electric car
He
land.
was on the 17th when Tesla was 220.
It was 220. He said 40 points. He was playing it from the short side, and he's probably maybe going to be bringing in that trade and making some money here on the 180. That's what I love about Jeremy. You know, he sets them up. He goes both ways. He puts his risk parameters in there. He does the swing trading very, very well. It's something I probably don't do well enough because I don't hold long enough. But he sets it. You know, that's, I guess, the way you got to do it when you're swing trading. You set your targets. And, you know, you set where you're going to have your stop out and you go with that. I've always been a headline trader, so I'm trading a lot quicker in and out. I probably trade the stock 5 times in the same time that he's traded it once. So I'm just racking up commissions, and obviously I'm doing a little bit different style.
Set it
and a lot less than this Jeremy Newsom guy, at least on the swing trading.
Set it and forget it.
I know I can't do that. I'm too short-termism. I have a big problem with it.
I did.
But it's made my living. I made my living through short-termism. So
well, you know, I did have a chat with Gene yesterday that we recorded, and I said if you started covering the stock again today, what would your rating be? And he said still overweight. So he's sticking with it here, and we'll get an article out on that interview. He had some good comments on some other stocks. Actually, has one stock that's not very widely followed, but I'll save the article for that. Let's talk. Let's make Dennis more upset, and let's talk about Qualcomm.
Oh, Dennis' portfolio is still under attack. It's amazing, you know, how this portfolio, this long-term investing, really moves with the overall market. Market goes up, my portfolio does pretty well in the first 3 months. Market goes down, my portfolio does pretty crappy in this month.
You're too high. You got too many volatile stocks in there.
You know what the funny thing is? I only talk about the volatile ones, but I'm way conservative. So actually my portfolio moves a lot less because I got all these preferred stocks in there, all defensive things. I'm probably too conservative. I actually do better than the market when it's going down. I do worse than the market when it's going up. So I'm too conservative. I'm a conservative investor, aggressive trader and conservative investor.
Dennis, how many stocks do you own in your portfolio, in your long term?
It's got to be 100. I don't know. It's got to be 100.
Then you're a closet indexer. That's what
it is. It is. It just moves with the market.
Exactly.
You have all these other stocks, and I'm like, glass half empty type of guy. So I'm always going to focus on the one that's going down and not notice, hey, my biggest position in my investment portfolio is Merck. It's been doing pretty good lately, but I don't notice stuff like that. All I notice is Qualcomm going down hard yesterday, and I'm mad all day. So overall, my portfolio, MasterCard, Merck, I've got some good ones in there too, but I only notice the negative ones, the bad ones. And I guess that's just my selective perception and my glass half empty type of investing analysis of my own portfolio.
Michael Pellini has over 70 stocks, so that's
nice.
That's getting up.
I mean, we're just basically the market. When you have that many stocks, it's, and obviously it depends the types of stocks. Like I said, I have a lot of dividend stuff, lower beta stuff. So my beta is a little bit less than the overall market. But market goes down, I lose money. Market goes up, I make money in the portfolio every single day, pretty much guaranteed, unless I had a really bad day, I guess, from the investing standpoint. Trading is completely different. Like I said, with the trading, for the newer listeners there, in my trading portfolio, my overnight portfolio, I trade market neutral. So I have equal amounts of shorts and longs typically, unless, I get a little gutsy and I have a feeling. For the most part, I'm trading market neutral. So completely different story. That's probably why my trading portfolio is very consistent and typically goes up 4 out of 5 days. Usually I make money on 4 out of 5 days. Very consistent in the trading style. The investing, it just moves along with the market.
Well, Spirit's making a good point. You sold your best trade of the year so far has been Tesla, selling that Tesla.
Probably. So sometimes your losers are your best trades. You know what another good one was? My Intel. Quickly getting out of the majority of that. So, I still had a little piece, but I got out of like 3/4 of the position right before it was going to get really ugly, right around, I think, 49.5. So, anyways, down to 43. So, I obviously anything you sold in the last 2 weeks ago is looking pretty good right now because everything's down. So, we'll see. Right. Deal though, you know what? It can't just be Debbie Downers here, though. Everything looks like it's imploding here this morning and stuff. If you got cash in your long-term portfolio, I think you put it to work a little bit here right now. because this is the times. Contrarian investing, when the market's in the gutter, time to stick them in the long-term retirement account. When the market's at all-time highs, it's not as good. That's the way I've always tried to invest anyways, although the trader in me sometimes stops me from me buying these stocks when I probably should be.
Let's do a quick stock here from the chat, and I think they had did Intuit have earnings INTU, or am I making that up?
They're scheduled. I believe they're after the bell.
Okay. Wow. This is tough. This is a consolidation period ahead of the report. And man, oh man, I think people are just undecided in this, which way it's going to go. I think the bottom of the range is 236. So I think you're in a whole lot of trouble. You take out 236. And the top of the range comes in. Oh, that's way up there at 255. I don't know why it gapped down back in April. I don't know if that was on April 29th that it got hit, but going into the report, anything can happen. I see a lot of downside under 236, and on the upside, the top of the trading range comes in at 255. So really not much to say. Dennis, any thoughts on Intuit?
Nope.
Okay.
I mean, there's just some stocks that have held up really well. If you look at the cloud, like look at the Splunkster, look at RNG, these things are like right kicking around high still. Twilio, they won't go down. I mean, so these are probably going to be the first stocks to go back up when you start to turn. Some of these stocks are just resilient and they don't want to go down. I mean, CRM has held up very well there too. And then there's other stocks that just go down no matter what. And we've talked about them too. So, I mean, obviously you want to own these more resilient ones. So stick with what's resilient, I guess. And if the market goes to turn, usually those are the stocks that are going to be making new highs first.
And Dennis, we do have 2 ETFs, leverage ETFs. That's all you're going to be trading.
In Canada.
Started to do in Canada.
Is this in Canada? Is it in Canada?
In cannabis, yes.
Cannabis in Canada. Give us. So when do these start?
Oh gosh, hold on one second.
They got approval.
Yeah, they got approval.
I added them this morning to my list.
Going to start. What's the date here?
Do they have a date?
I'm looking real quickly. So
give us the tickers.
Yeah, tickers are HMJU and HMJI. May 24th. That's tomorrow. So one's
double long and one's double short. Correct?
One is just. I think the inverse one is just plain inverse. I don't think it's a double inverse, but a 2 times daily and an inverse.
What we need is more volatility. We need more. Like you can't get enough of these cannabis stocks. So let's get the triple levered ones out there. What's this double levered? Weak. We want the triple levered ones.
I guess if you want to, add some leverage to your cannabis trade.
That's it.
This is a way to do it.
Let's just real quick cannabis.
Let's just talk cannabis quickly. Do 1 minute cannabis talk.
Well, VFF popped in the chat here, and he's looking to get this around 13, and I think that's a good level. I think someone's stepping ahead of you a little bit, though, because I see 4 lows right under 13.25. So I think someone's backing up here and accumulating a lot of stock here in the lower 13.
They're all showing life, a little bit of life,
a little bit
the death that is out here. I mean, they had a good day yesterday. Canopy Growth was up, Kronos was up. I've got Aurora Cannabis. That's the one I've had the whole time. It's starting to look not as good as it did, though. I've actually lightened up the position, considering selling it all, and then I would be completely out. The dog of the whole industry, or at least in Canada, is Afria. That thing just cannot go up. And we know they've had dilution, so much dilution in there, and other, issues, obviously accusations from that short seller. So lots of issues over at Afria. But I mean, if you're looking at these other ones like the VFF and stuff, it's been holding up pretty well. So I can't argue with you if you want to take a flyer. I mean, if the market really starts to go down, it's going to bring down everything. But you look at that VFF, I'd say, if you're buying in here, I don't know where you're going to give it because the things are volatile, but you do have a little double bottom there around 13. You
got 4 bottoms there. You actually
got a level.
5 bottoms between 09 and 39. So that's huge. And then I'm looking at this. If you want to try and buy it on strength, which is tough in this market here, oil just slips under $60. Oy, down $1.50.
U.S. jobless claims fall 1,000 to 211,000. So that we did have a number right there.
Oh, another reason, I'll cover one other reason for the sell-off here. But if you want to buy this on strength, William, I mean, There's a seller at 14. You've had four or five highs in that area. So if it could clear 14 on some good news, I think it's off the mat. But I think, sticking with your level, trying to buy it with lower 13s looks good. I mean, another reason for the tizzy this morning is because, the Fed just, they're standing pat. And I just don't know why there's such an expectation. I know the Fed funds rate is factoring 2 rate cuts here. I just don't know why. I just don't think rates are going anywhere. I don't think they're going up. I don't think they're going down. And I think if you lower
they're not going up, but the market keeps going down. We'll tell you that. We saw that in December. They got all dovish because they had to defend the market. So either way, this market gets defended. So if you're riding your shorts and you're pushing your shorts, I mean, I guess you can push them for a while, but it seems like eventually either the Fed's going to have your back or the president's going to have your back, because in the way the market goes too low, he'll be more pressured to do a deal, because he does not want the market to go lower. So just keep that in mind. If you are trading the short side here, it's been a fun couple of weeks, and it may continue for a bit, but I don't think the end of the world is coming here. I think eventually you're going to get a deal, and you could see a lot of, obviously a lot of these China stocks are really beat up. But I think a deal is going to come sooner than later if we stay in the gutter.
Exactly. What about imbalances here?
Let's go take a look. Alibaba, 107,000 to sell. That's ground zero. Anything China has been ground zero. GE is a sell and balance every single day. No different today. 168,000 to sell. Your banks are all under pressure. TLT is way up, or at least up 65 cents. All your banks are down here, and obviously going inverse to that and down with the market. Bank of America, 136,000 to sell. Square, 35,000 to sell. They're small, but they're all to the sell side, and we know why they're small, because institutions do not want to show their hand when volatility is escalated.
All right, we have about 3 minutes until our guest Chris Temple is going to bring us in with some macro talk here. Spencer, do we have some more earnings to cover?
We had a couple. We can go to C-Trip. We can go to, these Chinese stocks we kind of covered.
Yeah.
Why don't we just talk? Yeah, why don't we just go and talk some other fun things? And I just want to talk, about trying to call bottoms in stocks. And, we tried to do in Tesla yesterday, big mistake. What about stamps.com? And it continues. Look at this chart, and you're going to say, how low can it go? Or maybe you potentially might say that. This is hanging, and this looks like it could actually go down again. So the low of the move, which was on day one, they had this little rally here for 3-4 days to give us some hope to the longs from 35 up to 41. We are hanging here, and if we breach that 35 and a quarter low, Joel, we could open right up. So 35 and a quarter is a line in the sand. If you were long this thing, I would not want to be long it below 35 and a quarter. Thoughts on this setup of potentially going short one of the worst stocks of the year?
Well, it had a super long consolidation period, right, after that last report. So if you're going to mirror that, it's going to
maybe just going to sit here and meander forever.
Yeah. Yep. But under 35 and a quarter, you're right. Take it $30. They're not having a report out for a while. It's broken. And the institutions got out after that first big drop, and then whoever got into the consolidation period, they got smoked too. So just wait for its on, if it's trading at 40 before its next report, buy the 20 puts or something like that. I don't see what the drivers are going to be here to get this stock to go up. But low of the move, it's interesting on those really crazy days when you had a low on May 8th at 82.61. On May 9th, it was 35 and a quarter. And now you're back revisiting that area. So just a horrible looking chart. Not much else to say about it.
Let's talk Beyond Meat just before we get the guest quickly here. We put that double top, and we talked about it the day it hit NBC. The day it hit the nightly news was the top. And I jokingly say it's the Spencer top, my boy Spencer, because that's the day also that he tried the Beyond Meat burger and obviously did not like it at all. He even said it the next day, I did not like that hamburger. And we didn't tell him it wasn't real meat, but he did not care for it at all. And he likes hamburgers. So anyways, that's the joke. But NBC was the top of this. And I think it's in 96.68. You did put a little double bottom in yesterday. So it is off significantly. We're 20 points off those highs. But, we talked about it that day when it was $92, $93. And I said it that day, I think the top could be in here with the double top. And obviously it's come down since then. We're at $76 here now. We got this one right.
All right. 8:35, Spencer. You want to bring our guest in?
I do want to bring him in. Chris Temple, a longtime friend of the program. He is publisher and editor of the National Investor. Chris, are you with us?
I am. How you doing, guys?
Doing well. How's it going with you?
Well, hot. We're supposed to be pushing 100 degrees here in North Florida the next few days. That's too much for this time of year.
So, Chris, I got to ask you, you're one of the first people ever to listen into the pre-market show this morning as we were getting set up. How did you like it?
Fun. I should have been part of that.
Okay, we got a lot to talk about.
I'm trying to keep it PG, but sometimes I slip too.
Oh yeah.
We were saying that on the pre-market show you can cuss and swear because you're not on the air yet. But
right.
Sometimes a hot mic though, because you were snuck in on us there, Chris. So
well, Spencer sent me the link early, and I figured I'd get set up.
Nice. No, we appreciate it. We appreciate your long-term outlook, your macro outlook on the market. We drill down into the technicals, talk about short-term trading, analyst ratings and stuff. But it's the macros that move this market. And you're talking about the vicious circle of factors that could impact the U.S. dollar. Just go over that with us.
Well, you guys were just talking about the Fed and what the Fed should or shouldn't do. For almost his entire tenure, Jerome Powell until late last year had pretty much the same attitude that the Fed seems to have right now. They want to stand pat. They don't want to overreact. They don't want to be too dovish. They don't want to react to the president and all this kind of stuff. But one takeaway, folks, for today is don't ever forget, even though the Fed doesn't always want to admit it, that the Federal Reserve is the de facto central bank of the world, not just of the United States. With the dollar making new highs in 2019, it's likely to go much higher still for a variety of reasons. That is killing the ability of emerging markets to service debts. It's putting much more pressure on China. China recently had to impose capital controls not to keep renminbi from leaving China, but to keep dollars from leaving China. So the Fed is playing a dangerous game. I mean, for all of us looking at this, the level of interest rates right now historically is puny. Who cares? But in relation to the rest of the world, they're tight. Rates are high. And, we already have seen the Japanification of Japan in the last generation. We are now witnessing the Japanification of Europe. In fact, one of the reasons I'm bullish on the dollar is that, and you guys should start a kind of a.
I've got to stop. I love that word, and you got to explain this to us. Japanification. I got to stop. What's Japanification? That's an awesome word.
At some point, a variety of factors causes an economy to just bog down and plod along endlessly. There's no growth. There's no inflation that the central banks pine for. Japan's stock market peaked, a lot of people forget, way back in 1989. And a couple, 3 years later, the real estate market peaked. Neither of them has ever got back to their old highs. Their debt to GDP ratio is the highest of any developed nation on the planet. It will continue to get worse. They have a demographic problem. They've got a growth problem. Civilization hasn't ground to a halt there. But any kind of growth, as we would characterize it in modern day, international capitalism, is pretty much gone. So that's why they get by with keeping interest rates at zero or below zero. Growth is anemic, and it's just going to continue like that. The advantage that they have, of course, is that they can self-finance. They're pretty insular as a society and as an economy. They continue to print yen like no tomorrow, and they just flatline. So that Japanification, just imagine flatline as far as growth, as far as inflation and all the rest. Europe is now going through that process. Inevitably, we will in the U.S. But for the present moment, in relative terms, we look better. We're the cleanest shirt in the dirty laundry pile of the U.S. And that's one of the reasons why there's a demand for U.S. assets, and will continue to outperform the rest of the world, even though we're still going to go lower. We won't go down as much.
All right, let's talk Europe here. I mean, we've had a lot of emphasis on China here, but you got some European elections coming up. What's the potential impact on our markets?
Well, one of the comments I made on my website, nationalinvestor.com, when I talked about the UK election coming up, the UK was never supposed to be a part of these European parliamentary elections, but they are, and they're holding their elections today. These are rolling elections for all 28 countries that are starting now, and they will go through this weekend. Did either of you guys ever see that old dark comedy, The War of the Roses, with Michael Douglas and Kathleen Turner?
Yeah, I did. That was
all right. Imagine Nigel Farage and the leaders of the EU in the parliament, whether they're in Strasbourg or wherever they go. That's what you're going to have. That's going to be the UK's role in this. In France and in the Netherlands, two of the other anchor countries of the Eurozone, the most vociferous Eurosceptic parties are leading in the polls as well, as is Nigel Farage's Brexit party in the UK. So this is going to be even more than we've ever seen since they started this cockamamie experiment, including with the Euro 20 years ago. This is going to be like herding cats. You're going to have, it's going to be all that the plutocrats in Brussels, Belgium can do to keep this thing from splintering. Italy has already shown you what the future of the euro is going to be, because when they had their own elections a while back and Eurosceptic and nationalist forces won, the price for Italy to stay in the Eurozone was that they're going to bend the rules and the European Central Bank will continue to paper over their banking problems, which, as you guys may know, Italy has got the worst national banking system on the planet right now as far as bad debts. So you guys need to start a poll. You can do it over under. You can do it by date. At what point the euro reaches parity or worse again with the U.S. dollar, because that is where it's going.
All right. And China, I mean, on and off these trade talks, will it ever end before the election? Who knows? I mean, what I'm not sure what kind of input you can give us on that, but I mean, how do you prepare yourself? How do you prepare your portfolio for this kind of volatility and the extended contract trade negotiations?
Well, I'll tell you, I was worried for a while, Joel, that we were going to see President Trump give in, as several of his predecessors did, and just for the sake of a deal, which of course the president would desperately like to be able to say he negotiated, he wants to sign something. Get these tariffs and merchandise trade things off to one side and be able to go into the election next year saying, hey, I made a deal with China. I did this for our farmers and this for our steel workers and this for our manufacturers and so forth. I was glad that he did what he did recently, however, because our long-term issues with China are not about sneakers and soybeans and phones and things like that. They are systemic issues. This is about China having all of the advantages of international trade without any of the responsibilities. And I think that the people that are led by Robert Lighthizer are absolutely right that this is the moment, if we're ever going to do it, this is the moment where we can have the ability, with a better relative strength in our economy and in our markets. China's under enormous stress, way more than the U.S. is over this right now, financially and economically. This is the time to get them to behave like a first world nation. If you guys didn't see it, you need to listen to what Steve Bannon and Tom Friedman said a week or so ago on CNBC. That is the single best discussion you could possibly listen to as to what's at stake. And Bannon, who was at times, said he's a fringe character, he was actually very hopeful that where this should end up, and hopefully will end up, is that we have a world with virtually no tariffs, no quotas, none of this kind of stuff, but where everybody plays by the same rules. Because up until now, past presidents have allowed China to get away basically with murder, with stealing things, with all this technology theft and all the rest of this stuff. And they want the advantages of claiming to still be a developing nation, but they're the second largest economy in the world now. So you can't have it both ways. So this is going to be tough. It's going to go on for a long time. I mean, even Max Baucus recently, who served Obama as his ambassador to China, former senator from Montana, he said a while ago, and this is before the negotiations blew up again recently, this is going to go on for years. The idea that the markets got ahead of themselves this year, thinking, oh, this is going to go away quick, I think everybody has been disabused of that.
All right, going back to Europe real quickly. Any thoughts on Deutsche Bank DB here? Just a slow death march here. Any thoughts on Deutsche Bank?
Well, a lot of them. First of all, this is the flagship of the whole continent. It can't be allowed to go under. There will be bailouts of it to the extent that we, publicly, beyond what's already gone on through the back door. And I think what we're going to see, Joel, is that the ECB, and I've said this all year long, I've said it way before this. If you think Venezuela's currency has been bad, if you think Zimbabwe's currency has been bad in recent years, wait till you see what the ECB has in store. You've got a lot of jockeying right now to succeed Mario Draghi when his term is up this fall. I don't know who in their right mind would want the stinking job, because they're going to have to turn the euro into the equivalent of the Venezuelan currency just to keep everything papered over. It's a mess. In the last 10 years, for all the quantitative easing and zero interest rates and so forth, Europe has basically nothing to show for it as far as any significant improved health in their banking system. At least the U.S. in relative terms, we shored up the banks somewhat. And again, I say in relative terms, but Europe is still a basket case. And to keep that whole thing together, they're going to have to put a zero on the next QE program that they do.
All right, Chris Temple. We're on the line with Chris Temple, editor and publisher of the National Investor. So with all this gloom and doom out there, Chris, where's safe havens? Where do you put your money? Where are the value stocks? I mean, are you going to hop in now and buy utilities, which have been trying to warn us here? What's your take on the safe havens?
Oh God, no, utilities are at nosebleed levels. Thankfully, the only one of the only two I had on my list, National Grid's not done real well. But Duke Energy, I told people to sell that about at its peak at 91. They're having some individual issues in North Carolina right now over whether they're going to have obligations over a coal ash spill. They're having trouble getting rates up. I would not want to buy, generally speaking, a sector that has lousy pricing power when in a slowing economy, consumers will push back even on legitimate requests for rate hikes. And where, I remember once upon a time when utilities had double-digit yields and PEs of like 5 or 6. It's kind of like the opposite now on steroids. So no, they're too expensive. I'll tell you a good yield stock. If you want to find a nice anchor for your portfolio, check out Sunoco LP. SUN is the symbol. This is something that was written off for dead a while ago. This is a wholesaler. They buy fuel from refiners. They sell it to retailers. All of the predictions that they were going to have to cut their distribution, that's almost an 11% yield. They've maintained their distribution. Their finances have dramatically improved. And the chart of this thing is not broken yet, like a lot of other energy stocks have done. Energy is an enigma right now in a lot of ways. There's a lot of companies that are just crying cheap. But, a lot of us have had blood drawn by trying to catch falling knives of companies we thought were cheap. So I've been treading real carefully. But I love Sunoco. I think it's great for conservative people who want a nice high yield and something where there's a lot less financial issues than there were a couple of years ago.
Yeah, it's banging up against a big level here, and I'm not talking about the dailies here. I'm talking about the monthlies, and it looks like if it can clear like $32.50, it looks like it's quite some room on the upside here. Anything else on energy you want to share with us? Crude having a hard time. Looks like we're going to lose $60 today. Anything else in the energy sector?
It's always risky to make big bets on crude based on geopolitical worries because they come and they go. Nobody wants to believe in the end that there's going to be a war in the Middle East or that Iran is going to do something really outlandish and try and shut down the Straits of Hormuz. You've had some relatively minor issues recently over there that kept the price levitated for a while. But this is right now a tug of war between long-term supply issues, which are very bullish for oil, and add those geopolitical worries on the bullish side. And on the other side, you've got worries about the whole global economy going into recession, which is a very real concern. It's a reason why I've been very down on the base metals and stuff. Gold, I am slightly bullish on because it will do better than the rest of them. But I'll tell you, copper has surrendered almost all of its gains from 2019. It ran up to almost $3. Now it's back to 260 something again. And until the markets are able to better digest the long-term issues with China, realize that it doesn't necessarily mean the world is going to end, but that it means there's going to be downward pressure on global growth for a while. So, and energy is susceptible to that as well. There's one company I just added this week, which I think is a great takeover candidate in Texas, is Carrizo Oil and Gas, CRZO. It popped, and then it gave some of the gain right back yesterday. I'm sure it will today as well. Their finances are killer. They got a trailing PE ratio of like 4.5, and that's GAAP earnings. That's not the hocus pocus earnings that a lot of companies report these days. They're screamingly cash flow positive again. And, there's a lesson from that recent battle over Anadarko, which Occidental won in kind of a Pyrrhic victory. And that is that in a lot of industries, including energy in this country, if you're a big player and you can find a good, smaller, mid-sized company that has got notably better cash flow, a lot of production possibility upside, you're going to buy them. And I don't think it's long before somebody buys Carrizo.
Chris, what are you doing on June 20th?
June 20th, I am going to be up in either Wisconsin or Minnesota. In fact, I'm leaving next week. Every spring I take a trip up to see my children and grandchildren. It's kind of a fun time with them. I do some business along the way, but
sure.
There again, have laptop will travel. So
all right. Well, if you happen
to doing on June 20th,
if you happen to swing by New York City, Dennis and I are going to be out there for the first Benzinga Trading Summit, and we got a lot of traders, a lot of great people coming to share their wisdom about the market. So we'd love to have you there. I'm not sure if we're going to be doing anything online, so you could participate in it, but just wanted to extend an invitation to you.
I appreciate it.
Yeah, Chris Temple, editor and publisher of the National Investor, hammering the macros to us, and that's something we need. Thank you very much. We'll talk to you again soon.
Take care, guys.
All right, 33.75, 34 even. Your last print in the S&Ps. We're trying to get off the mat here, Dennis. What are you seeing in the pre-market trading?
Same thing. I mean, everything is down. You're seeing some stocks go green here. So where we were seeing only a few before, I'm seeing some more. Gilead and AMGN are both trading up. They both got upgraded. So now they're actually trading higher here. They were trading up last night. Target, resilient little stock that is, held on all those gains. And not only that, it is actually in the green here now by 72 cents.
Upgrade this morning.
Yeah, JP Morgan, right?
Yep. Upgrade to overweight, price target raised to 100.
Yeah, Best Buy still trading higher, but it's leaking. And again, I said they reported on the wrong day, and that was when it was 71. It's now in the 69 handle. So continues to leak here. That's just a victim reporting on the wrong day.
What about this Target chart here? Big old gap underneath here and trying to break into another gap area.
Well, held on. It held on.
Yeah, it did.
Past the first test. So now if your line in the sand's got to be yesterday's low of 76.80. I mean, if you're bullish, that's where you do not absolutely want to see a breach. But, I mean, you start getting up into this area, you could challenge 80. I bet you there's some size at 80, though. Let's go check it out. JV Spec might beat me to it, but I'm going just to the book to look at 80 and see if there is some size. There's a little bit at 79. I can see 13,000 shares. I know another 13,000 at 80, so maybe somebody just dumping in the 13s. I'm not sure, but that's not huge. Again, it's early, so maybe that size is going to grow, but I would think just psychologically, $80 probably pretty big.
All right, and L Brands is leaking a little bit here. Also the victim of the market now, up only $1.60. So just a slow leak. No buyers. So you may
buyer strike.
Yep, you may get a shot. Yesterday's high, 22.51. The previous day, actually a lot of highs at the 1, 2, 3, 4, 5, 6, 7. Just call 22.60. I mean, that's the old resistance. As absolute support that it needs to hold today. Qualcomm, we did talk about it. That got a couple downgrades today. Just interestingly, I talked about this yesterday. We hit 67 in pre-market trading, and never got there during the day. Didn't have really much of a rally, just hanging out in a 67 handle today. So I think that that's a big area. If not, how are you going to find support
Too much
in
air
that candle?
on them.
Yeah. 70.
Unless this ruling gets overturned or something, that's going to be a catalyst potentially there too, but difficult. I do see OXY just added to the top or to top analyst favorite list at Raymond James. I just saw it go by my
OXY?
Yeah, I know. It never has been getting any love at all. So just keep an eye on that. I mean, oil is destroyed today.
OXY is at like a 10-year low.
That's why I just saw it go by. They're buying low. Raymond James. I just saw it go by my ticker. I didn't read it.
Okay.
You get in with Warren and Icon on this.
Yeah,
right?
yeah. Buy low, sell high. Isn't that how it works? I tell you though, all jokes aside here, it's kind of the idea of long-term investing sometimes, to buy when everybody else is selling. It's what's worked really well for Warren Buffett over the years. I don't know if OXY is my stock, but if you've got a list that you've been wanting to buy stocks on, you can do some striking here. I mean, this has been weak enough now that I think it's time to start, if you've got a lot of cash, to start maybe, sifting a little bit in, not all of it, not because, we don't know how long this trade war is going to go on. But I still think if it gets really ugly, that he'll be more inclined to do a deal, and then that's going to prop us back up. So I don't think we're going to get into a situation where we're looking at like back in December where we're going to lose 20% in 3 weeks. I don't think that's happening. I mean, obviously anything can change, but I'm sticking, I might, start nibbling on a few stocks I've been wanting to buy too. Square is on my list. I still have not bought it. It's down $1. It looked pretty good yesterday. That is one that I might nibble into. I still like the story. I think eventually the stock turns around. It is in the gutter. But I do think, and evaluation's a little bit, that's what's always kept me out of it. But could grow into the valuation there too. Analyst estimates are up at like $1.30 for 2021. So you start looking at that, and you think 2 years from now, if this thing was 65, trading with a P, of only maybe 25 to 30, it starts to look a hell of a lot more attractive.
Okay. All right. S&Ps are trying to get off the mat here. Still down 24.5 handles at 28.33. Of course, we'll be keeping an eye on that pre-market low of 25.25. Did we do any price action on Gilead and AMGN getting upgrades at Citigroup?
That's interesting because the Gilead especially, because it has not. When's the last time Gilead got upgraded? It's been a long time. Everybody hates it.
No, it hasn't been that long.
It's been a while.
We got an upgrade April 10th at UBS to buy.
What happened April 10th? Just going to look. It lifted a little bit, and then that was basically the top. Okay, so UBS didn't do very well. Anyways, you got overhead supply up at 68. That's the only issue with buying Gilead. I think if it has, if it starts to show some life here today, I think major resistance up at 68. So I guess, it's kind of tough, but it's nice to see an analyst give, love to a stock that has obviously not gotten any love. I guess they got some from UBS, but I feel like they haven't got any love before that in a long time.
All right. So interesting. I mean, we're trading up 35 cents here, matching ranges yesterday for the most part. So okay, get over this these two highs, 67, 66.73, 66.80. You got some room. Really has been quiet as of late. So let's see if they can take this thing through 67. But I mean, it's just really hasn't been moving since it had that big fall. And their problem was their drugs were too good. They cured diseases, right?
Yeah, drug was too good.
And Amgen, I think this one is just haven't looked at the chart in a while. This one, it really held up. Wow. I've never seen 4 monthly highs in the same area. Holy macro. That had to have been at the let's just call it 210. Look at that. 1, 2, 3, 4 monthly highs between 2.830 and 210.19.
Going back to the all-time.
Yeah, we're a ways away. That's trading up $1.45. I mean, yesterday's high seems like a long ways away. Well, let's see. What was yesterday's high? I'm sorry. We are trading just above yesterday's high at 172.05. So things open up on this one. Not seeing any real significant resistance. Maybe, I don't know. Let's just call it 176. I see high 75.5, 76.41, and 77.24.
Interesting. Also, we got 2 upgrades to these stocks, or an upgrade to these two stocks ahead of ASCO, the American Society of Clinical Oncologists conference. Starts next Friday, the 31st.
That's big.
We know that can and will move biotech stocks. So
Yeah.
interesting to see two upgrades in that space a week before that. Also, on the ratings front this morning, Chipotle. Haven't talked about this one for a while. I feel like downgraded at BMO to underperform. Price target lowered from 675 to 620.
So that's equivalent to sell.
Yep.
CMG getting hit hard on this morning. It's down 20 points, 2.8%. I mean, you put in multiple tops. Yes, we did just sneak above the high there just 4 days ago there when it got up to 727. Well, that's now we're going to look at those lows of the move. The low of the move back from May 13th was 680. And below that, then it's the slippery slope down to 658. But I mean, it's not getting there today. So, and it is downgraded. It's a stock that has been loved. I think you find some support at 680.
All right, Spencer, you want to wrap up today's show and final show of the week for me, but you guys will be here tomorrow.
Oh, yeah, that's right. Joel will be out heading out.
Where are you going?
Weekend trip. Virginia, right?
Yep. I'm going to visit Miss Emily out in Lynchburg, Virginia. So, and it's like in the 90s, like 94, 95. So I'm going to be baking out there. Looking forward to seeing my little girl.
All right. On that note, that'll be it for today's show. If you have not yet checked out what's happening June 20th at the Benzinga Trading Summit, you can go to bzprofit.com to learn more about what's happening there with Joel and Dennis and other traders, Jeremy Newsom, Todd Gordon, and Marie Band. Tickets are available on that site. If you enter the promo code PMP15, all caps PMP15, that'll get you 15% off any ticket, including to the trading lounge, where our traders will be walking through their strategies at length throughout the day. June 20th at the Sheraton Times Square in New York City for that event. Thanks to our guest today, Chris Temple. Thanks to all of you in our chats. You can catch our podcast if you missed any part of today's show. And please remember, everything we discuss is for informational purposes only, not meant to be investing advice. Everyone have a good rest of your day. Dennis and I will be back with you on Friday.